Are you concerned because a DTC Chill or global lock has been placed on your securities? If this happens, it can be very difficult for your investors to buy and sell shares of your stock. Furthermore, it can be a major red flag, causing other investors to get nervous before they invest in your company. The course of action you need to take to remove the chill or global lock will depend on the reason why the chill or lock was put on your company in the first place. There are a few reasons why regulatory authorities may impose a DTC chill or lock. First, a lock is far more serious than a chill. A chill may only last for a few days, but it can last longer. In contrast, a global lock will suspend all DTC services, grinding operations to a halt. The biggest reason why a chill or a lock might be imposed is that the DTC has reason to believe that there is a legal, regulatory, or operational problem with the issuance of the security. Or the DTC might be concerned that some of the transactions are not being cleared involving the security. In a lot of situations, the reason for the chill or the lock is that the DTC is concerned that an unregistered stock is trying to be sold on the market. A few other reasons include engaging in a reverse merger with a public shell company or being involved in pump and dump schemes. Typically, if a chill or a lock has been imposed, the first step is for the DTC to issue a notice on its website. Then, it will start the process of informing all of the participants involved. This includes brokers, who are expected to comply with the chill or lock, and restricting the trading process. The process of removing the chill or lock depends on the reason for the suspension. Typically, the company needs to try to trace the tradability of all shares in the public float. Then, the company has to be able to explain how the shares became free trading securities. To complete the process in a timely manner, companies need to reach out to security professionals for help. Even if the chill or lock is removed, this process can have a tremendous impact on the company's reputation, scaring off future investors.